Hello everyone, welcome to my channel. My name is Gaurash Russell and today we are going to be talking about the stock analysis of the Coca-Cola company, ticker symbol KO. Coca-Cola was first invented in 19th century by a pharmacist named as John Pemberton and was brought out by a businessman named as Trix Candler. Products of the world's largest non-alcoholic beverage company is sold in the United States since 1886. Coke is presently sold in more than 200 countries around the globe and has sold around 30.3 billion unit cases in 2019 and 29.6 billion unit cases in 2018. They own and market more than 500 non-alcoholic beverage brands around the globe. Coke owns four of world's best soft drink brands which are Coca-Cola, Diet Coke, Fanta and Sprite. Its worldwide headquarters is located on a 35-acre office complex in Atlanta, Georgia, and has about 86,200 employees around the globe as per 2019 annual report. It owns about 234 manufacturing and bottling plants, including warehouses, and leases around 1,700 retail stores. There are some fun facts about Coke. Do you know if anyone tries to drink each brand owned by Coke per day, then it'll take him about 9 years to try all of its products. This company owns about 20 brands, which generates $1 billion of sales in a single year. Coca-Cola claims that it is the second most understood word in the world after OK. Talking about management, the present CEO and chairman of the company is James Quincey. He has held some key positions like President of European Unit in 2008, Chief Operating Officer in 2015, and President of the company later that year. He has gradually climbed the ladder by showing his potential and leading some key acquisitions like Innocent Drink. He changed the entire Coke hierarchy and management, which eventually increased the profits for the company. He has been constantly innovating at Coca-Cola and tried various marketing strategies which were quite fruitful in the later years. Talking about the marketing strategies, Coca-Cola is the largest company investing in marketing and has been investing $4 billion every year from 2015 to 2020. These are the three big marketing campaigns by Coca-Cola. The first one is the sharing can. They changed the design of the can in such a way that the Coke can be splitted into two halves and people can share their Coke and spread happiness and smiles all over the world. The second campaign was the Coke's Christmas Santa truck, which is about 21 years old. And the last one was the Project Connect, in which people share the Coke with individual names printed on the bottle. Let's get into the balance sheet now. Market cap means the total cost of acquiring the whole business. From the last 10 years, Coke's market cap has been increasing and presently it is about $193 billion. According to market cap, Coke ranks 20th in the top 30 companies in the world. EPS means earnings per share. The present EPS of Coke is 2.35 and an increasing EPS is always considered good by investors. EPS ratings are measured from 1 to 99, with 1 being the lowest and 99 being the highest. Coke has the EPS rating of 61 as per IBD rating. PE ratio. This is one of the methods to figure out if a stock is generally cheap or expensive. Coke has the PE ratio of 19.41. And according to Warren Buffett, if the PE ratio of the company is less than 10, it is considered to be underpriced. And if it is more than 20, then it is considered as overpriced. PEG ratio. PEG ratio is another indicator of a stock's true value. It should be less than 1 as per conventional wisdom, and Coke's present PEG ratio is around 0.40. Coke has been paying dividends consistently since 1964, and it has a history of paying dividends for 56 years. This is one of the major indications that this is a stable company, and why Warren Buffett loves this stock. Coke's present annual dividend payout per share is $1.64 for each share. Debt to equity ratio. Generally speaking, as a firm's debt to equity ratio increases, it becomes more risky because if it becomes unable to meet its debt obligations, it will be forced into bankruptcy. A good debt to equity ratio is around 1 to 1.5, and Coke's present debt to equity ratio is around 3. Return on assets, ROA. ROA tells you how good the company is at using its assets to make money. Generally, ROAs over 5% are considered good. Coke's present ROA is 11.20, and you can see from the chart Coke's ROA has been increasing from the last 4 to 5 years. Return on equity, ROE. With ROE, higher is better. ROEs of 15 to 20% are generally considered good. Coke's present ROE is around 48%. Let's have a look at Coke's insiders trading activity now. Most of the insiders in the company sold their shares around $60 and are again getting in at lower prices. Let's calculate Coke's intrinsic value now. This is a great tool for calculating the intrinsic value of the stock using the discounted cash flow model. So what this tool does is that it uses the free cash flow of the previous, like the history of the stock, and then it estimates the growth rate of the free cash flow, and using that it assumes the free cash flow to be growing at that rate, and it gives us an approximate intrinsic value, but like it's approximate, so it gives us an idea. To start this, first you have to come down to the DCF calculator. What is your company's free cash flow? So estimate average free cash flow, you have to click this. Then you have to go to the ticker symbol, put in KO, click find. There will be another tab opening. You will be using the free cash flows from 2010 to 2019. Copy this and you have to paste it here. So you can see that it automatically calculated the free cash flow. Use this average FCF. Then you have to go to the next tab and you have to click estimated average growth rate. So you have to put in KO again, find. Then as you can see that the net income in 2010 was more than 2011. So what I'll do is I'll use 2011 net income, copy this, paste it here, 2011. Then for the current I'll use the net income of TTM, which is 10,017, copy this, paste it here, 2020 is the year. Use this average growth rate. What do you consider short term? It's 10 years. Just keep it the same, continue. What is the discounted rate you would like to use? Just keep it the same. Just keep this also the same, continue. Now it is asking for the common shares outstanding. For that you have to open a new tab, go to Google, put in shares outstanding for Coca-Cola. I like to use Yahoo Finance here. Go to shares outstanding, which is 4.29 billion, copy this and paste it here for 290 because it is needed to be in millions. All of the other things that I have put in is in millions, so just click continue. And the intrinsic value per share is 21.86 at a 10% annual discount rate. So what I think is, even if its intrinsic value is $21 and presently it is trading at $46, I think that this is a great stock to get at around $40 to $45. Even if it is not it is not trading presently at its intrinsic value, even then you can see from the chart of the last 5 years that it is constantly increasing and it is constantly providing the dividends to its shareholders. So you just have to hold this share forever, like you have to take it and you have to forget about this share and it will keep you paying all the dividends. So you can see here that this price of $45 was back in 2018 of maybe May, I guess. Yeah, it is here somewhere. So I think that it is a great stock to buy at this point, like around $40 to $45, and then all the insiders are also doing the same thing. They are buying it at the lower rate and then they are selling it at $60, as we saw in the previous charts. So this is the Coca-Cola stock that I got in my portfolio. So you can see that I have invested about $4,500 into Coca-Cola, and the average cost price is 41.52, and the total shares that I have got is $96, and the total return is around 450 or 500, around $500. The return percentage is 11.63. So I think that we should buy it around $40 to $45. Also, from the PE ratio, it was more as required by Warren Buffett's evaluation. So I think it is overpriced right now, but according to the intrinsic value also it is overpriced. But as I told you before, that from the Yahoo Finance chart, it does not falls that much. It is always increasing from the last 5 years. So this is a great time to buy it around $40 to $45 and then forget about it, because it constantly pays dividend. So I think this is how you should get into this stock. If you like this video, please like, share and subscribe to my channel, and if you want me to review any of the other stocks, please let me know in the comment section below, so that I can research about that stock and let you guys know what I think about that stock. Thank you and see you soon.